Boy, am I glad that correction's over. Down yesterday, back up today. Mixed bag of earnings here. Some really bad and some pretty good. We got durable good orders at 8:30. I don't know if that's going to move market. David Prince, T3 Trading. He's at 8:35. Back with AB. We'll hear about his ski trip. It's Tuesday. It's pre-market prep.
Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, folks. Trading up 8 handles after yesterday's correction at 50.88 and a quarter. So nice rebound, just undercut yesterday's low. Right back up, buck down 15 cents at 103.60. Bonds up just a little over half a point, giving some life to the IWM. We're at 119 and 5/30 seconds. Crude flat here, down a few pennies at 77.48. Gold up 860, 20.47.5. Silver trying to get back in the 23 handle, up 14 cents at 22.87.5. And another good day for Bitcoin. Off the highs of the session, but still up $2,250 and 57,560. Let's bring in Triple D, and might as well bring in Aaron too. We haven't seen him in a while. Good morning to you, Triple D. How you doing?
And good morning, Aaron Bree, who's just getting back from his ski trip here. So I want to hear about this ski trip first because it sounds like it's a lot of fun.
Boom. Yeah, it's good to be back. Thank you guys for having me again. Colorado, beautiful this time of the year. Was out in the Rockies. My first time skiing in a couple years. First couple times down the mountain a little bit, I was a little bit tentative. And then, after a couple days out there, definitely ripping it harder the second half of the trip. And it was a lot of fun. Only a couple spills, couple falls, but that's good. And Dennis and I were talking before the show. I don't know how this mountain stock, ticker MTN, Vail Resorts, which owns now like every mountain out in Colorado, the stock doesn't go up, but I see with my own eyes, there's 1 million people out there and they're all paying a bunch of money.
Doesn't go down either, though. That's the only thing. It just kind of stays there. Is this just like a yield play? I never trade the stock. It's funny. I just don't trade it, but it's got the 3.62% dividend. You wonder, just like it just pounds it out. It's got the P of 40, actually. So it's a lot. It's got an $8 billion valuation there, too, though. So not cheap. Just kind of hangs out. The stock, you're right, Aaron. It just doesn't go up. It doesn't go down either, though. It just kind of hangs out and pays you 3.6%. So I don't know. It doesn't really look like it's doing much and ready to go here from the chart either to me. So I think I'm out on the AB Mountain stock.
Once I left, I mean, the stock went down 3%, but I'm glad we got to talk about it today, even briefly on the show, because now I can expense my whole trip because I was doing due diligence on the stock.
You saw foot's on the ground or foot's on the hill.
Swimsuit and a toothbrush is what you need for a good vacation. I mean, Dennis, have you taken the kids on a ski vacation? You got to carry the skis and the boots and everything. Swimsuit, toothbrush, and if you want to overpack, bring an extra pair of underwear.
That's it. No, both my kids got ski passes at the local hill. They try to go once a week. My wife takes the 2 kids. I never go. So they're actually getting to be pretty good little skiers. But no, that's not for me. I'm not a skier.
Markets. Let's talk markets before everyone gets gets upset with us.
We already did mountain. We just started with a different stock. It wasn't the stock that everybody expected to start with.
Not that one. A very stubborn sell-off yesterday. That's what I would call it. There were bids there. It was like there's no free ride on the short side, and it came down even a little weak after hours, but they cut yesterday's low back up. I mean, this is what you like to see after a down day. But man, you do have the IWM perking up, Dennis, and that's one thing you've been talking about for a while.
Yeah, and I've recently took a position, a little bit bigger position in the IWM, and I do think that we're going to start thinking about those interest rate cuts again here. Now, inflation data, we talked yesterday about this. Get a little bit of hot inflation data. That could derail the IWM rally. But right now, breadth is starting to expand a little bit. We're getting another few stocks starting to pick it up. NVIDIA has paused, and they're starting to look at other things as well. So the AI trade is still hot, but other things are starting to get hot too. So that's a bull market. And I just want to talk, if we're talking macros here, I'm starting to get bullish China. I feel like the catch-up trade could be coming here. It's starting to show some life here. Baba's been in consolidation station here for quite a while. I have no position in Baba, but I did take a position, which I talked about in Baidu. I'd consider a position in Alibaba here as well. I don't think we've got a risk of, an imminent invasion here. I was worried about that before. I'm not as worried about that right now. I think it could come eventually, but I think we'll feel more like the geopolitical risk picking up. I don't think it's just going to be out of the blue. So that's why I think the valuations are so suppressed here that actually just maybe we've got a chance here for some of these China stocks to show some life for once.
On the macro front, kind of going back to the U.S. So yesterday, home sales data came in lighter than expected, and Treasury yields are starting to dip a little bit this morning, which might be why you're seeing that pop in the IWM this morning. But Dennis, I'm right there. I'm right there with you on these Chinese stocks. I mean, I've talked about Baba a lot on this show.
Do you still have your Baba?
I still have my Baba. Yeah. I mean, I'm telling you, because I'm putting in my Roth and just holding it. And like my thing with Baba is like, I just feel like there's no way in 5-10 years with the value there that it's not trading higher. I mean, there's been so much weakness that I wouldn't go out and chasing it for swing trade or anything, but I'm holding it for the long term. I'm in on Baba.
You know what they say? Don't throw Baba out with the bathwater.
Joel, always good for a pun or two here. It's up $1 here. China stocks having a pretty decent morning here. It's just we've been down this area before. If you look at the Alibaba chart specifically here, we just feel like, how I talk about, we've been a long, downtrend, but we've been consolidating and trying to hook up. And I like that little hook, like we're starting to hook up a little bit. Not that I'm a big pattern trader. I did learn, Joel, this morning, though, about Head and Shoulders on CNBC. They were talking about, they had an analyst on there completely explaining the Head and Shoulders patterns. So, now I feel like I've got, a lot of, I've got a degree there in pattern trading. But
why don't you tell us about it? Tell us about that experience.
Well, there's nothing to tell. So this is a Head and Shoulders pattern, and this is bullish. And I was like, oh, pretty
cool. This is the neckline, and this is the projection.
It is a Head and Shoulders pattern. Saucer, bullish, and, cap, not bullish, and la-di-da-di-da-di. I've never been a big pattern trader. I've never been a big fan. I've told you the story before when I first started up rate trading. I read all my technical analysis books, going in, so I was going to be ready to be a prop trader. And I'm sitting in there, and I did a scanner, and we had, remember, First Alert back then, and you could put patterns, and it would recognize patterns, and it would give you the stocks that had those patterns. So I bought all the Head and Shoulders, or I sold all the Head and Shoulders. Maybe that's why I did it. I did it backwards. But I sold all the Head and Shoulders and bought all the cup and handles, and all I did was lose money. I'm like, you know what? And then I started looking at the book and figuring other stuff out. And, there's a 6-month learning curve there, but I learned that patterns, really didn't work that well for me. But there is a play, they're not poo-pooing them all. But I do think, like, when you've got a sustained sell-off, as long as we've had an Alibaba, it starts to show a little bit of life. If you can get back up to Kenny Glick's point, even on the VWAP, you start just showing life, consolidating, getting above maybe some moving averages. I wouldn't know where they are because I don't use them, but I just like that little pattern of this hooking up a little bit. And Bob is starting to show me a little bit of life.
One of our biggest stories of the day yesterday was Palo Alto Networks getting a huge pop and a good follow through, basically. I mean, we talked about yesterday the sell-off, but there was no sell-off in Palo Alto. People saw that Nancy Pelosi took her profits from the NVIDIA trade, went into Palo Alto, and just ran with that. The bulls were buying it. Stock is trading up another 4% pre-market this morning.
That's
and,
Nancy's
now, influence on the market. She might be more influential now than, some Kathy Wood.
She's definitely more influential than Kathy. She may be the most influential person on Wall Street here now. She's more influential than Warren, because there's no way Palo Alto Networks is going up like 12, 13, 15% if Warren bought it. She is now the GOAT. If you want to know who moves stocks, prices the most, the biggest influencer on Wall Street, it is Nancy Pelosi. And that news came out yesterday morning. We got to give a shout out to Ryan Faluna because Ryan was on this trade and Ryan did buy the stock and, is doing well. So Ryan will be on the next show. So shout out to our own Ryan Faluna who made a great trade on this. But, Nancy, the news comes out just after 9:30 yesterday. And then it started getting around and they bought Palo Alto Networks all day and they couldn't stop buying it all day. And they've bought it all night too. So this stock, which loses $100 in 3 days, is trying to get half the losses back. That is an incredible comeback. We're still in the buy the dip. If you're tech, you just buy the dip blindly. You know what the best strategy is? Talking to another friend of Bray Trader last night, we got all our core strategies. I'm like, the best strategy right now is to throw out all the other strategies, just blindly buy the dip in tech, because we're back to that market here again. Tech stocks winning, Palo Alto Networks winning, Nancy always winning.
So I do want to, I've got some of the specifics of the trade pulled up here in Benzinga Pro. Shout out Chris Kaji for putting this together. So for everyone out there that is like, oh my God, Nancy Pelosi is the perfect trader. She can't miss whatever. For the record, she bought 50 call options way in the money, and that's what she's been doing. She's been buying these call options, deep in the money. She's not going way out of the money like risky trades. She bought 50 call options at a strike price of 200 on February 12th, before Palo Alto Networks reported earnings, and then doubled down after the stock dipped and bought 20 more after the report. So she bought 50 before the stock went way down, and then bought 20 more after. So her and her husband are probably still down on this trade, but they don't expire until January 17th, 2025. So that's kind of been her MO with these trades, is buying deep in the money calls that expire, a year plus out. But from what I can tell, she's probably still down on this options trade. Obviously, yesterday and today's price action is going to help her, and maybe she's going to be up after now. But so she's looking good on it, but not again perfect.
That's good information, AB. So maybe we'll take the GOAT title away, and I believe it is, like, to the chat's points, her husband that does buys, but
right.
The Nancy Pelosi family. We'll maybe take the GOAT title away and just give her the influencer title.
Yeah.
Because she is the biggest influencer out there. I don't think you can doubt it. I mean, the stock was sitting here, and it was up yet the day before, and maybe it wanted to go from a technical perspective. We talked about it having technical life. So that helped. But it opened 288 that day, like yesterday morning, and it just, as soon as that started circulating that she had bought, it just never stopped going. So really, it's run basically 30 points here. So 10%, just because Nancy Pelosi has some options, and we found out about that. That is crazy. So what I want to know is, next time those Nancy Pelosi options, she buys options or something, I want everybody messaging me on Twitter and letting me know Nancy Pelosi bought stock, because we need to know that information as quickly as possible, because the stock price is going to go up on those buys.
Yeah, well, if you bought it in February, you'd be, I don't know what term I want to use for that, but you wouldn't be too happy after that earnings report.
If you came out and you chased her.
Where was it?
And I don't know if she's listening to pre-market prep. I mean, she's adding to a losing position, right? Or her husband's adding to a losing position.
That's a page from Kathy Wood's book.
Yeah.
Never frown, average down. I know Kathy listens to our show because she learned that from you, Joel.
All right,
the never frown, average down strategy.
Let's get to technicals here and then move on to some biotech stocks here. Into the gap area, when we talked about this with Ryan, he was waiting for some stabilization. That didn't happen, but you took out the double top at the 377 area, and I was off to the races on Friday and then Monday, obviously, with the catalyst. I'll just alert our traders and investors, if your short-term target, there's one number, 322.75 is your pre-market high. And then you got a long way to go to fill the gap. That's up at 360. If you're looking for a gap fill on the downside, the top of yesterday's range, not too far away, 313.88. So there's a look at PANW.
If you're chasing it now, though, now it's like you just ran $50 in 3 days. You just ran up 15%. I never made a lot of money chasing stocks up 15% in 2 days. So you are chasing. Could keep going, but if you're buying it this morning, you are late to the party. And I don't know if it's getting close to midnight. Not saying it's lights out for Palo Alto. I would be a buyer of dips, but I would wait for a dip at this point in time.
All right, before we move to earnings land, I saw a comment from 30 in the chat saying the Pelosi Nvidia stuff is overblown, which this is just my opinion. I actually kind of agree with that because people acted as if Nancy Pelosi was buying some like secret company, right? There's like a bunch of people out in Silicon Valley, San Francisco, where she lives. They all do that same strategy, buying leaps on Nvidia, whatever. It's not like, oh my God, this is some secret company. And then I don't agree. I think probably the elected officials shouldn't be able to trade individual stocks like that.
We're tanking here, Dennis. You see what's going on? Sorry about that,
Aaron. No, you're good. What's going on in the?
I don't know, Dennis. What are you doing over there?
Well, we went down 3 points. So
we're
Joel, you got a good perspective here. 8 handles from the high, but since we started the show, we're down 3 points.
There's news out there.
All right, McCarthy's talking on TV.
Let's go over to earnings land. We had a bunch of companies report after the close yesterday. Zoom, an old COVID darling. We were just talking about Cathie Wood. Might as well start with Zoom. Some good numbers. Stock is trading up more than 8%. Pre-market EPS came in around $1.20 versus $1.13 estimates. They adjusted their EPS projections higher than the street's estimates. So some decent guidance there as well looking forward. And this is a much needed bounce on Zoom. If you look at the overall chart, go to like a monthly or weekly, the chart doesn't look pretty, but you're getting a nice little bounce here if you were buying the dip in Zoom.
Wonder how many times it said AI on the call.
Oh, that's a good one. The over under probably, I'd say, I don't know, 25.
Yeah, that's what you wonder here. Regardless, though, the stock, I've said valuation on this is reasonable. The problem is I just don't know how much more competition is coming from them. Forward P on this puppy's 13, so it's trading under a market multiple. They could come out with any other product, and they could come out AI, then you start thinking, maybe that's. But every time it seems to get a lift, we've seen this, I believe, on the last earnings report here too, Joel, if my memory serves me well.
More than that.
Popped up
more than
pre-market.
that. Yep, more than that.
And I'm not even sure it opened higher. So if you look at the charts, you may not even see it, but I do believe it was up pre-market and then gave it all back. So just be careful. This is one you historically do not chase. And also, I believe already the chase is already kind of deteriorating to a certain extent, because if you look at that chart on the left, we were up at 72 here this morning. We're down at 68. I don't know about my math, but that's about a 40% sell-off from what we've had, from the after-hours gains. So, yeah.
$72
almost half the after-hours gain back.
Yeah, $72 is what you hit. And that was an area of two highs. 71.45 was a high, and then boom, there was another high at 71.50. So, if you had been long and you'd been out there, you would have been wrong for maybe a half hour, 45 minutes, but that's a good level. It has done this over more than one quarter, pop off the earnings. Boy, oh boy, I think you're just gonna have to pick an intermediate level here if you wanna sneak out of this one. It's down $5. It's leaking. Top of yesterday's range, 64.32. If it gives it all back, but I'll give you a level currently to where we're trading right now, 68.80. I'd give that 2-star resistance. That was your January 30th high in Zoom.
All right, other companies that reported yesterday. Let's go to Unity. We're sticking with the Cathie Wood plays here. So Unity,
is she still in that one?
Let me check that real quick. I know this was one of her.
Give us the earnings. I'll check it.
All right. You check Cathie Wood. I'll give you the earnings on Unity. Stock trading down 12%. Let's see. We had EPS come in at 66 cents, missed the estimate there. Sales came in at $609 million, beat the $562 million estimate. So revenue, sales were good, but the company reported some guidance that the street did not like. And this video game play is getting kind of crushed today. Down again 13% pre-market. And I even though I like the video game space and I want to go long it, this is one that I'm not going to touch.
Yeah. And again, the rating was on the wall. I didn't like it when they cut all those jobs, like cutting 25% of the workforce is too. Cutting 5% of the workforce is cost cutting. Cutting 25% of the workforce is demand is not there. You're cutting jobs because your demand is not there. It's too much. And that was the day That was the top. That's when I sold, was that day. Wasn't the top, but that was like on the way down. I got out at $39 that day and obviously turned it into NVIDIA. So that was, one of my best calls of the year. That was like on the second or third day of January. And maybe it was the first week of January, somewhere in there. But anyways, now we look at this thing down here, $28. People are asking me, you're going to reload this thing? It's down in the mid-20s. This story here is really hurting, folks. I don't know. Like, they started charging that fee. Remember, they had everything,
and then
they
took it
charging
away.
the developers the fee. Then they took it away. Then they got rid of some management for it. It's just a managerial mess. I do think, there is a product here. I do think they can figure it out, but they're still finding their way here. And I don't want to be early. You might have it on your watch list, but I'm not going to be a hero and try to catch the falling knife. Although blindly buying the dip on tech has been working. So if you're doing it, I won't argue with you. It worked on Palo Alto. It's worked on Palo Alto's not Unity, though. Palo Alto Networks is leader. I think I'm just staying away here, at least for now.
Boy, a lot of pre-market action there. You did a dip under $27, so there is a daily low from November 13th at that level. But since we're $2 above it, I don't know if we're gonna get there. So I'm just gonna go to something a little bit more relevant for traders, investors. If you're looking at this, 5 lows at the $28 area. That's 70 cents low. Lower, I don't know if I'd put my whole lot out there if I was trying to cover a short or buy the dip, but 5 lows in that area, and then you had consolidation between 28 and 30. So right now, as we speak, I'll give that two-star support coming back on the upside. People would love to see the lower end of yesterday's range. Don't know if we're going to get there. 31.28. That was yesterday's low, and it traded big volume yesterday. It went from 7.5 million to 27.5 million. That means people are stuck going long into the report. That's why you saw that instant whoosh.
Can we do Workday, because we're talking about buying the dip in tech, and this dip has already been bought in something fierce. WDAY traded down, I believe, to like 278 last night. It is now up at 298. So it's already 20 points off the lows. It's down only 3% here now. AB has the numbers for you. I do believe they did an acquisition too, a small one.
They did, Dennis. So Workday reported EPS of $1.57, which beat the $1.47 estimate. Sales at $1.9 billion came in line with estimates. And then the company did announce it will acquire HiredScore. The terms are not disclosed. So, the earnings themselves came in pretty good, but a lot of times, like we've talked about on the show, when a company announces an acquisition, you can see the company that's doing the acquiring trading slightly lower. I don't know if that's why this thing was getting hit. It reiterated the Workday's guidance, so didn't raise it or lower it. But yeah, I mean, like you said, Dennis, the stock traded down and is now getting bought right back up pretty quickly.
Money managers just underinvested in tech, or scooping up anything techy. And to Workday, trading at all-time highs going in, is one of the cloud darlings. Obviously, CRM is the godfather of cloud. And then you have Workday that, came from them, and every other cloud stock pretty much somehow has a connection to Salesforce and Benioff. But Workday is a darling. It's a stock that people want to buy, just like Palo Alto was. You get these strong names, strong tech names, and they get these earnings dips, people are coming scooping them up.
All right, I won't do the mute button like I did yesterday. I kind of wanted to see if Aaron if Aaron got it, but our feisty chat today probably would not like me using the same joke. Yeah, not tolerating. Wow, this is a super tough chart. The the one on the left is the pre-market trading. I got a pre-market or after hours low of 276.46. So we're $2 above that. So throw out, I'd say 290 on the downside, because you had a pair of lows there. That's $6 away. That's 1-star support. And then on the upside, just the fact, I think everyone that bought the dip here, they could care less about a gap fill, and they're hawking 300 here. I would look for no more upside, at least for today, until you can get a sustained bid in the 300 handle. Your rebound high off the 276.50 low has been 299.71.
All right, let's stay in earnings land real quick before we get to our guest today, and then we'll have to hit up on the biotech roundup. Let's go to Macy's. Old retail darling.
Yeah.
Not doing great. Apparently, announced that the company will close more than 100 stores. EPS came in at $2.45, beat the $1.96 estimate, and sales came in at $8.12 billion, which missed the $8.15 billion estimate, and the company announced it is going to close 150 Macy's stores, and it sounds like it's going to double down on some of its other stores,
higher end stuff,
Bloomingdale's, and another one too that I didn't even recognize the name of. But either way, I mean, it sounds like people aren't going into the malls anymore, aren't going into Macy's to buy their clothes and perfumes and colognes. That's what I always think about when Macy's, when you're walking through and they, spray you.
Oh, they try and do that.
They got a million different scents and stuff, but I don't know.
I hate that.
Yeah, I know. It's the worst.
It's coming at me, this cologne.
It's not as bad as like what an Abercrombie used to be when you used to walk in there and just get hit with that stuff. But yeah, I mean,
Abercrombie does everything right though.
They do.
But yeah, that's okay if you get hit with the Abercrombie one. You just don't want to hit with the Macy's one.
I
actually did take a flyer on this, put a small position on in the long-term portfolio ahead of the report, because I feel like even if they missed, I felt like there's going to be underneath demand here because there's still the potential for a real estate deal here. That they've talked about the company and they were going to get an offer and there was people looking. I still think there is that potential there. The earnings weren't great here though, so I'm gonna hold it. It's a half-size position, small position. Just the whole broader market theme too, Joel, that I'm going with. I think this market's gonna start to broaden out a bit. I do think we're going into. I am bullish overall stocks here, remain bullish, and I think retail could participate in that. And again, valuations have always been suppressed here. I mean, the stock can make $2.60 or whatever it is for the year. It's $19. I mean, it's trading like 6 times earnings or 7 times earnings. So maybe this is the wrong thing, getting back. But I feel like we're going to go into, if interest rates actually start going down, I feel like we're going to get into an environment where interest rate sensitive stuff is going to start to outperform. I mean, it's and again, we got to keep an eye on the TLT because this all stuff moves with the TLT. But it's stabilized here now. Inflation data is going to matter. All that stuff matters to Macy's a lot more than it does to NVIDIA. But I feel like starting to broaden out and starting to buy some non-tech plays, maybe not a bad idea.
PC index coming out on Thursday, so we'll keep an eye on that. I'm going to throw out the low. I don't know why they hit it down under $18 here, almost down to $17. No, $17.75. The only thing I'll point out here, and just like technical analysis, and you can make it as complicated or as easy as you want. Well, I'm going to try and make this easy. You had seven highs at the 2040 to 2050 area. 7. So that means there was sustained seller out for all those days. That's super extra major resistance. So I'm not looking for a major move on the upside until you can clear that level for good. Let's look at yesterday's range, and I'll just go yesterday's range. Yesterday's low is 1921. So, and the close is right above that area. You get a sustained 1930 bid. I think it will be a buy the dip opportunity here for Macy's, but respect that major resistance at the 2050.
It's an important day for today. They had a slight guide down here, so you would think the stock gets hit just if it was just trading on fundamentals, but because it's getting bought back, I think that thesis of me thinking there's underneath demand here and people still thinking about a bid, and people also thinking, interest rates may have peaked. All that stuff could come into play here.
Did we just have durable goods? Because we're getting a little pop.
Yeah,
here.
we're chopping around a little bit here. We did just get some.
Yeah, let me go ahead and pull those numbers up real quick in our Benzinga Pro. And then we do have David Prince hanging out backstage. We'll go ahead and get
it's not important when CNBC's on commercial, during the economic data. So if it's important, I believe in is a PCE, Paul saying PCEs tomorrow. Is that correct?
No, I think that's Thursday. I think that's Thursday.
No,
oh, is it? What's tomorrow?
Tomorrow is GDP revision at 8:30.
Yeah.
Durable goods came in at negative 0.3% for January versus a positive 0.2 estimate. So missed there by about 0.5%. USA durable goods orders came in month over month down 6.1% versus 4.9% estimate. So a little bit weaker than expected. Just like yesterday, those home sales came in weaker, and we saw the Treasury yields dip this morning. So I wonder if we'll continue to see those yields dip lower. But we've got David Prince hanging out backstage. Once he signals that he's ready to come on, we'll go ahead and bring David on and talk about some of his trades.
Couple minutes here.
Yeah, it looks like he's still
David's
getting ready.
made some fantastic calls for us too, so 100%. He's going to get connected in there. I know he's been talking about the XBI, and he's going to maybe talk about it again here because I follow him on Twitter, and he's a great follow. And the XBI has just been on fire. And the reason the XBI, we can talk this just quickly, and then we can get his thoughts going forward on it. XBI is ripping today, up 2.27%, and that's your other big news of the day. You got Viking Therapeutics here, up 81% here today. Wow. It's a huge move, and Aaron, you probably got the news in there. They're in the obesity drug business here in phase 2, going well.
Yeah, let me go ahead and pull that news up from VKTX. While
1.9% of your XBI, so that is why your XBI is ripping here today. If you think a stock's up almost 100%, that means the XBI is going to go up 1.9% just to, and again, it's up only 78 now. It was up over 100% this morning. But just to account for that component. And then you've also got LGND trading higher, which owns a big piece of
6 million shares.
Yeah, so this story here. So give us that the news here. Phase 2 going well, VKTX.
Yep, so Viking Therapeutics announces top-line results from Phase 2 venture trial of dual GLP-1 and GIP receptor. It's VK2735 in patients with obesity. Study achieved primary and all secondary endpoints demonstrating statistically significant reductions in body weight at all doses compared to placebo. So some very strong numbers coming again from the phase 2 trials. We've got a couple more of those phases to go before this thing hits the market. But I mean, anything weight loss, GLP related, it's basically the AI of biotech, right? I mean, anything that's been the story for the past year or so. And you're actually seeing some of the other weight loss companies leaking on this news. Eli Lilly down about 2% this morning. NVO down about 3.5% this morning. So the market does not like, it's punishing these names because another competitor is about to enter the market. Not about to, but it's imminent that there's going to be other competitors entering the market.
Yeah, and phase 2, so just give you perspective here, is a long ways from phase 4. So it's not like this, company is coming out with this drug tomorrow here, but so far so good. And there will be more obesity drugs. This isn't just going to be NVO and Lilly dominating the whole market. There's going to be a lot of players in there. I've said I think Amgen's going to be a player in there too, although Amgen's trials didn't go so well. People have been asking me, why is Amgen down? Because they came out with their data and it wasn't great. So they're still working. That doesn't mean it's over for them and that drug. And I've said with Amgen, valuation's fairly attractive. So even without the obesity drugs, I think the stock's still a pretty good company. But I do think Amgen eventually will get, a drug to market here. But there are a long ways away from that. But Viking Therapeutics just got a lot closer to it. And VKTX is a very small company, closed at $3.8 billion market cap here. So obviously that's, going up significantly here today. But, if they can get an obesity drug to market, we know these are game changers. So everybody's jumping on board the obesity drug bandwagon.
All right. I got a lot to say here just about this. First of all, major leaking in Viking Therapeutics, man. The pre-market high, 87. So I don't know. You're just going to have to scale out with scale out your offers higher if you want to try and access this thing today. Legan, which owns 6 million shares, that's leaked off its high. And maybe this will be a discussion for a longer time. But, what happens to you when you go off Ozempic? If you go off these,
you can't. It's a lifelong drug.
These drugs for life.
Yeah, if you go off it, you just gain the weight back, and I mean, so that's good for these companies.
You don't exercise. You don't think that you just pop this little pill. You got to maintain your exercise. Okay.
I don't know if you do, Joel.
You do.
Here's the crazy thing. I don't think it's like you. So the way the world works, if you go full exercise and you lose weight without any drugs. I think this is like you probably have to do some exercising, but I don't think you have to go all in crazy Arnold Schwarzenegger style to lose money on these things. It's the easy way out. This is what they're creating as an easy way out, so you don't have to hit the gym every day. I believe, that's the whole point to it all.
All right, we do have David Prince hanging out backstage. Oh, no, it looks like he got up for a second. So when he gets back, real quick, I saw someone tip us in the chat, and I have this whole itinerary, things we're supposed to talk about. If you
when we get a tip, we go to that.
If you want us to derail our plan, this is how you do it. Money,
it's not very hard.
Money talks. Craig tipped us $10 in the chat to talk about Rivian. Let's go ahead and pull that up real quick. Rivian reported, of course. I don't even know. I've been gone. I was out last week or 2 weeks ago, but it was last week. Not a great report. Stock down. Now we're down near $11. So this thing was trading around like 15 before the report. Not a great report, obviously. You got that big dip, but I mean, are we getting some buyers down here at least? Can we get some consolidation? Can $10 or $11 be a psychological level?
Yeah, double bottom at 10. I like that, actually, the 10. So that's where if I was taking a flyer and saying they're going to buy dips, and EV is not the place they've been buying dips, so keep that in mind. It's got to hold 10. That's your out. So it starts going 980, 970. You got to cut bait, get out. But I think if you're taking a flyer, 10's your support. That's it.
And
you got 10.
Yeah. I'll give you the flip side here. Two highs, 1102 and 1092. So if you get a sustained 11 bid, then work your way up to your next target to be 12 and a quarter. It's one minor stopping point. The low on the day of the big drop was the close was 1145. I just think this, instead of like a super bullish pattern, double bottom, I think this might just be seller exhaustion. You traded $200 million when it dropped $4. You traded $125 million when it dropped another $1.50. You only traded $72 million yesterday. So I think you got a little seller exhaustion here. But 11 bid is good for this. Next target, 12 and a quarter.
Yep. All right. Well, let's go ahead. I see David hanging out backstage. So let's go ahead and give Mr. Prince our very special pre-market prep welcome and see what he's been trading when we come on with David. All right, David Prince from T3 Trading. Good morning and welcome to Pre-Market Prep.
Good morning. I had a blow up. Sorry, like computers and video. Like right when I was to do this, I'm using some cockamamie speaker versus my fancy microphone. Is everything working now? Like
you sound perfect.
You look good. We can hear you. We're all good. So
all good.
Let's get straight into it. I mean, I know a couple weeks ago you had some great trades on SMCI. Walk me through, what your trades were, how you played it, and what you've been doing since then.
All right. First off, thanks for having me, guys.
Of course.
I love this show. So I was basically of the opinion we're at a few focus areas as 24 started. Like the rest of the world, AI was certainly a theme, but then it was like underneath the less obvious stuff. And one was most certainly the way I look at my money is just, I'm sure you guys do too. It's just best risk reward. I don't care like how many people are in that theme or if I'm in the Fed. I just want wherever I can make the most money legally with the least amount of risk. And biotech into 24 was definitely one of those areas. I know the industry pretty well. I'm not a scientist, but I understand the capital a lot of these big companies have and how they don't have the growth they used to, from the Bristol Myers, the Amgens, the Gileads. They need to become growth companies all over again. They can only do it by probably buying the Vikings of the world. I also financed privately Immunome, which is kind of the story stock of biotech the last couple of months, because one of the most important men in biotech who founded Seagen, he took over Immunome and he became the CEO. So that was a big play of mine for the last couple of months. Anyhow, I've been very biotech enthused, so that's been a focus of mine.
And XBI, and you've been correct. I mean, XBI has been blasting off here. What is impressive about this XBI rally is that the TLT has not rallied. And what we saw last year was the TLT selling off. That means XBI is going to sell off. The TLT rallying, well, XBI will rally. November rally and the XBI was all TLT and interest rate driven. Well, now we're seeing separation where the TLT is not rallying, but the XBI is. And I love that disconnect. It's showing you the strength of, you know, speculation coming back into this market and speculation into some biotechs. And that's what this market has been missing, is like, oh, it's been, you know, the tech trade. Well, biotech is a tech trade here too. And I think it's just been held back because of interest rates here. So what are your thoughts going forward? I mean, it's been a pretty good run for you on XBI here. Can this run continue?
So first off, I just want to say, like, exactly what you said. I did a video on it 2 weeks ago. I'm like, we have hints that the only thing that you didn't include is without TLT, without IWM, because they're so tied in together, right? I said, without IWM, it's showing signs. I could have replaced that with TLT. Now, like anything else, the risk reward is not so levered, at least in my opinion, to the upside, right? I think it's in a bull trend and the charts look great, but I'm expecting, if you look at that weekly, that 100 to 101 was always my big target area, which for me, any index that can go up, you know, the equivalent of well over 50%, that's a big trade. I think we'll take a rest. But I don't want to get overly macro, but I do think the wind is at biotech's back, because it did underperform, not for a year, not for 2, but for 3 years, because big cap pharma really is slowing outside of this whole weight loss craze. They really need to buy growth or find it via mergers. And a lot of these companies, they're not idiots. They borrowed money at 1% and 2% and sit on a lot of capital to put to work. In fact, my buddy, the CEO of Immunome, I shouldn't say my buddy, but I'm a fan of Clay. His whole business model at Seagen and now Immunome is around buying other assets, right? It's not just about what we say organic growth. So I think mergers, acquisitions, it's going to be a big story. But 101, rest time is kind of my thought on XBI. And I'll be a buyer, 94, 95, because I think the trend continues. Because once interest rates actually do go lower, if they ever finally do, that's like a whole nother lever that's probably the more important lever than what we're seeing, and yet we haven't even seen it.
Right. So we're on the line with David Prince again from T3 Trading. David does have a free webinar tomorrow night at 4:30. I'm going to drop the link in the chat if you guys want to go ahead and sign up for that. Just some great insights here from David. And again, a great follow on Twitter as well. I'll drop that too. You mentioned that the, interest rates coming down would be great for biotech stocks. Do you think that's the next big catalyst here? Or what else are you looking for in some of these names that you're trading?
Yeah. So some of them have just moved already. Like we see what's going on with Viking. This is a fundamental story driven, right? Immunome, which was, I guess, a lot of people started following me because of it. When Clay came in, the prior, just to remind people, the prior founder of Seagen, the stock was 6 or 7. Now we're 25. I'm not trying to avoid the question, but I think it's more a case by case basis. You can't just go out and say all biotech stocks are going higher, because they have these outsized moves, right? I mean, look at this JANX. Do you guys even know what it is? I had never seen this name until this morning. It's up 125%. So I think we have to look under the hood. Where's there meat left in the moves? Where's there not? And I don't have a lot, to be honest with you. I'm very picky on biotech. I don't have 5 names I love now because they've all moved so much. So it's going to be more case by case. And that's how I'm going to play it. Immunome, I'm a buyer. They did a secondary at 20 the other week. I was an aggressive buyer. Bounced right to 27. I'm price sensitive. It's like a 30 some odd % move in a couple of days. So into 27, I trend. And I think this whole rally's been amazing, right? Everyone talked about it being a bear market rally 6 months ago. It turned out to be a great bull market. Now I'm like a little less excited about the market. So I'm definitely not buying up here on a lot of stuff. Sorry to be long-winded, but figured I should be detailed. And
are you looking at potentially, getting short the market here? Are you looking for opportunities to get short the market, or are you just kind of sitting back and analyzing here at this point in time?
Well, so I've tried to be that guy, right? Try and call a tops. I'm smart enough, or at least I lost enough money to know I'm not going to be successful at that. So what I am going to do is a case-by-case basis look to get short and look to put on more hedges. And I always tell people, in these great bull markets, you don't have to try and make a big market call. You just have to be short once or twice here or there And frankly, on your baby, which I just want to say out loud, I mean, you were very comfortable holding SMCI as it was going higher, and it kept going. I was like, this guy's pretty good at holding winners. But I want to
not usually. I just got lucky on that one.
Well, that one you did. I just thought it's worth saying because I was impressed. But I put out a short, like a very significant short on that name about 2 weeks ago via stock and puts as it was crossing 1,000. And I'm not mentioning it because it was such a great trade. I'm mentioning because that's how I'm going to short the market, is be more opportunistic, not short the Qs saying this is the top, right? I still think there's plenty of meat on the bone underneath. Let's say if small caps work and continue to work, Solar, which is the dog of all dogs and still reporting poor numbers, but might be pointing to a bottom in the industry via end phase, that'll work. There's still areas I'll be looking at, right?
How did you short it, David? How did you short it?
That was a nuts one. So I shorted it by being willing to take some pain. Thursday evening.
Like you
I'm going to walk you through it
with some stock. Yeah, I just wanted the actual strategy.
Let him walk you through it.
Yeah, sure. Yeah. So Thursday at 97 RSI, I said, I've done this before. This is what I'm good at. But I know the only way I'm good at is to be in pain, right? And hope it opens up on Friday, right? I don't like 92 RSI. We all know if we've been around, it could be 94 RSI, and 94 can be 95. It gets so silly once it gets that overbought, you can't quantify. But usually, if you try not to manage your P&L too much, that's when you get close to that whoosh. So I just simply said 97 RSI, 980, 970. I'll be short stock and I'll start buying puts. And I did. I bought the 900s and the 750s for like that week and the week after. And I went short stock. That morning at 10:50, I said, well, I had a plan. And I said I was willing to take pain. And that's usually my best signal. But here we are at 98. I'm not throwing good money after bad. You know, I even told Inner Circle, I said, guys, if you're going short thousands of shares overnight of this, you're going to be blown out. And when they finally ring the bell and say, like, it's time to be all in short, you're going to be blown up. So you're much better if you're going to even enter a trade like this. The way I look at it is to be small and look for that entry intraday or miss it, right? There's no need. So that's what I did. I was literally short a few hundred shares, which for me is not a lot. And then after the open, when we took out that low, I said, okay, I deem this to be a really special possible short that can be like shorting the entire market and catching a 10, 20% correction. So we added 950 puts for the day. I had 750s and I had 900s. And by the way, I'm a bozo, always sells too soon. Like 950 puts went from like 3 to 150. I think.
Holy cow!
Wow.
Yeah, no exaggeration.
What is that? 50?
I was out by like
50
30
times?
and 40, like a total idiot. But there were people that made their year, and I just want to go back to it on that one short. So I think, no like salesmanship or any of that crap. Like people like accounts that aren't multi-million-dollar accounts had their year done. And that's kind of how I see the market. If something comes up, great. If not, I'm not going to look to short the Qs or short IWM. In fact, I'm adding exposure to IBM because I think it's going to play some catch up. I think now makes sense that it does. Maybe I'll be wrong. But that's how I'm going to short the market, is just, intermittent opportunities via different vehicles, SPX, things like that. But
and when you see,
I just want to say, so summing this up, and I think David did it the absolutely correct way. A little taster when you feel like it's getting close.
Hedges are fine.
And then what I've always said is when shorting stocks, and I've shorted stocks my entire 25-year professional trading career, is kick them when they're down. Kick them when they're down. And you know what happened? It fell at 50 points. And I tweeted it out that morning as well. When it got down to 1,000, I said, I think the bubble just popped. And
so I want to say something. The real money is when at 1,000 is not being too quick, right? Thank God I was good. I actually rode that short to about, out of fairness, not 800, like 890, 880. I was out. But the key to a short like that is if you're going to accept the pain, and I said this out loud, I was like, you don't short a stock like this overnight and be willing to be down that type of money to make 50 points, or else you have a really dumb risk reward model. Like you shouldn't manage money, right? So if you're going to be in it, now that you're on the right side of it, stay on it. So that was kind of the key where I'm proud of. We didn't just, 950, we're up 100 points. I still say if you're going to have the balls to do something that, I want to say it frankly, 90% traders that really haven't been around should not do this type of thing, right? It'll just put them under. But if you've been around and you manage real money and you can afford to do this, then you better stay in it when you're winning. And we hung in there, so it worked. Anyway, I'm glad to see you
lot of
were
your
on the right
trades
side
really
too.
well. Congratulations on that. You guys rocked that SMCI trade. So tell us about, what's the next? You got something else? Like, what do we got here? You got the XBI, you got the SMCI. There's been a lot of good David Prince calls here. We want the hot stuff.
So I wish, I'm not going to pretend like I wish I had something special to bring to the table. I will say, Mara last week, I looked at Mara and I looked at Bitcoin, that tight formation, right? And I'm not even a chartist. I'm sure one of you guys is probably like a fancy chartist. I know how to read charts, but I don't draw them. And I looked and I was like, wow, this is tight. If this was Tesla, right? If this was Amazon, we'd be getting really excited for when it breaks out of this from that 50 to 52. So I bought Mara in anticipation of that. Not because I like the company. It really tends to be the best proxy in terms of percentage gains. So it's been a monster.
Yeah. It's the ultimate leveraged play.
Right. Now, do you go out and buy it? No. So my point is, I don't see a ton of meat on the bone with too much, except IWM as a whole. That's where yesterday, I'm just direct. I took some profits in Immunome at 25. I took some profits, ENPH. I had bought some into the 50-day. It was 122. I took some profits there. SMCI, I was long over the weekend, 890, took some profits, and I looked and I had this pile of cash and I said, I can sit on it, or where do I see the best risk reward? And I said, IWM, as we get closer to that Fed meeting where we are not going to see them cut rates, doesn't it enable the narrative of, okay, the next Fed meeting, we have a decent shot? And if that's the case, does money sit and wait for the confirmation, right? They didn't with XBI. We might just have a move. So I added so I don't have some special one name call for you today. Hopefully there'll be a name that comes up at the right price, but I'm really price sensitive. So for now it's, hey, I saw risk reward still like a historic under performance versus big cap. I added to IWM yesterday. I was pretty comfortable doing so. 200, 201.
Well, there you have it. David Prince again with T3 Trading. David's got a free webinar coming up tomorrow at 4:30 p.m. Eastern. I'm going to go ahead and drop that link in the chat one more time. If you want to hear some of his trade ideas like that SMCI short, go ahead and sign up for that webinar. David, thanks again for coming on. Looking forward to catching up again soon.
Thanks. Sorry if I was discombobulated. Not having a camera, speaker all before I had to come on was not fun. Anyhow,
that's how we roll, David. That's how we roll on PreMarket Prep.
Have a great day. Enjoy.
The same.
Thanks, David.
Great guest. Always had some good trade ideas.
T3 guys are all good. Radler, Derek, obviously David. These guys are fantastic traders, fantastic speakers. We learned so much from them. We love T3 Tuesday.
Love it. All right, we've got a couple headlines to get to that we've got we haven't gotten to yet. Let's go to Norwegian Cruise Line, ticker NCLH. I was, of course, had on vacation, but not on a cruise. I was in the mountains. Maybe my next one will be doing some due diligence on a Norwegian cruise. Reported earnings this morning, actually. Adjusted EPS came in line with estimates at $1.23. Sales beat slightly. A $1.99 billion versus $1.97 billion estimate. But hey, look, the revenue came in better than expected. Stock trading higher, up about 10% this morning. People are cruising again.
Guidance is good here too. RCL gave us an inkling that NCLH would probably do okay because 3 days ago they came out of the blue and raised guidance. If you were listening to that, there's 9% on the bone here for you, and NCLH here too. So again, we're seeing this is a good thing. We're starting to see the broadening out a little bit where it's not just AI plays moving, some other stuff is moving here too. The coming recession just hasn't come. People are still spending. RCL is still busy. People are finding ways to do things. COVID changed the mentality. Don't save your money for tomorrow because tomorrow, we don't know if it's even going to come. YOLO, you only live once. All coming really from COVID here. And people spend money. And even if they're tight for money, they'll find money to spend. And that's why the recession never came. That's why I don't think the recession is coming unless something, that we don't see, coming out of the blue is always, a possibility, but it doesn't look like it's coming. And here you've got Norwegian, benefiting from this
nice
as well.
pop.
So
yep.
nice pop in NCLH.
Great area here. If you bought it, if you're looking for more, pre-market high, just kiss 1760. But I'll just go to the multiple high area again. And you have 1, 2, 3, 4, 5, 6 highs at the 1760 area between a half and 76. That's where you stop now. If you're looking for more, boom, you need a sustained 1760 bid, then say hello to 18. But right now, you got to respect that that resistance confluence with the pre-market high.
Yeah, and Norwegian has been kind of a dog, at least compared to Royal Caribbean and some of the other cruise lines. But how many people during COVID were very quick to write the obituaries for all these cruise companies saying, "Oh, no one's ever going to want to go on a cruise again," all this stuff. And here we are in 2024, and people are still hopping on them. Joel, I mean, you said earlier, a good vacation, all you need is a pair of swim trunks, right? So that fits
and
that
and a toothbrush. And
a toothbrush, right? But maybe, I mean, if you forget one, maybe they'll have an extra one on the boat, or you can knock on your neighbor's door or something, ask to use theirs. Let's see. I see some people in the chat talking about Soundhound. Ticker SO. I mean, remember when Nvidia, dropped like 300 million into some of these companies and they were popping? Looks like that pop is still continuing.
Yeah, and it wasn't like Nvidia just came and just dropped the money into that company there.
Right, they had held it for a while.
This was from 2017, a legacy position that just got disclosed. But it doesn't matter at this point. And now the meme stocks, memesters have got it. Now the algos have got it. Now it's just, flying, and who knows where this party ends. We know it usually ends in tears, but right now it's ending in beers because everybody who's getting this is partying in the street. I mean, this has been a big move here. I've tried to day trade these things a little bit to limited success. I've been okay with them. There's a whole list of these things. The other one, I don't have any positions on these right now. Wish I did, actually. BBAI, Big Bear AI. I mean, you can just go through. It's up 12% this morning. Was up 20% yesterday. There's another one. I'm just looking at, the list of these things. Well, C3 AI has been moving here too. It's one of the leaders. But then there's some smaller ones that have been moving here too. GFAI, I had that one for a little bit there. It popped and then it dropped and then now it's trying to come back again. I mean, there's a bunch of these little AI companies that seem to be getting some life here. Bullfrog is another one too. But Soundhound was the one that was disclosed. NNOX was also on that disclosure. It's lifting up again here too. But the Soundhound thing, like the memesters have grabbed it, Joel.
We're off the pre-market high. If you're looking for a target on this one, you have late on the 15-minute chart. You got a seller at 769. So if you're looking for a target on the upside, that's 60 cents away. You've kind of turned a little bit, headed south. So use that level. After that, not much on the monthlies. Really nothing between where's the current high? We're over 7. Not much between 7 and 8 in Soundhound.
I've got a couple more headlines real quick. So if you guys are okay, do you want to go?
Sure.
Two or three. All right. So I see someone in the chat talking about Google. I don't know if you guys had a chance to talk about this yesterday, but Google's stock traded down about 4% on the day. Just really on fears that its AI product is, isn't on par with competitors. And we've seen this before. I think it was actually about a year ago when the company first announced Bard and the stock dropped. It went down like 12% over the span of a few days and shed more than $100 billion in value and came back as people are like, okay, no, this thing will be an AI play. Just I thought maybe people were overblowing this whole thing about Gemini being, woke and all this stuff. But I'm going to pull this up from Joe Weisenthal over from Bloomberg. This is interesting. I mean, so he asked the AI chatbot to write a job description. He said, I work for an organization that lobbies on behalf of America's oil and gas company. Write me a job description, basically. And the thing said, I got to zoom out a little bit. The thing said, I understand you're looking for a job ad, but I cannot fulfill your request to write one that promotes the lobbying of fossil fuel interests. So it's like this thing. I mean, the people that are criticizing this, it's pretty. I mean, it seems like, they've
overshot on this,
right?
And the other one that was going around, and I'll say it, was this that this was flying around the internet. I can't verify it, but they were trying to make it give an image of a Caucasian person, and it couldn't do it. So they're saying they basically overshot on the racist stuff. So I don't know what Google is doing here, but
there's big backlash, and it's not just from, it's
yeah.
pretty,
So now you got the whole
mainstream
woke
backlash.
people pissed off at this thing too. That Google's another woke stock. You've got them talking about this on the internet, and my major concern with Google is the potential competition. It's not so much that their Gemini product is inferior and all that, but if we start using chatbots, various chatbots, instead of going to Google to search for stuff,
that's gonna hurt.
That's a major problem. So forget all about the woke stuff. Forget about all of that. Maybe that's why it was down yesterday. But I think there's another issue here. What do they have? What's their market share of search? Like 95% or something crazy? I mean, if we start using chatbots instead of going to search, and sometimes I find myself using the chat GPT a little bit. Like I was asking yesterday, and I joked about I was asking for humanoid stocks and it wasn't very good. They've got to get it updated because, it's like 2022 information. But I mean, if you want to get a quick list of, stock peers, you can just ask it that. And it gives you the pretty good information up to 2022 and probably better than, what I would find in a Google search. So I think that's the biggest issue I have with Google is that they have such a large share of market share in search, and they make so much money from search, is that if they start to lose some of that market share, that's an issue. So I'm a little bit cautious on Google for that reason.
All about 138 for Google. You had a bad day yesterday. You made a low at 38.74. You got another daily low at 38.17. 50% retracement of this move since late October comes into that area. So if you're looking to buy the dip after it just snuck, barely made a new all-time high, came back, Google must make a stand. Bulls must make a stand here. Hold that 138 level.
The technicals don't look great here too.
No.
We're the pattern traders today. It looks like a head and shoulders there to me. So learning that from CNBC today, but that's a joke.
Yeah,
but 145 neckline, head up there 155, breaking this like 140 to 145 neckline here now. I don't like the technicals here. I don't like the technicals. So I know buying dips on tech has been working here, but Google has been struggling here for a little bit here now. Basically, I think the better part of 2024, is it down on the year now? It's pretty dang close to being down on the year. So you can clearly see underperformance here.
Oh, yeah.
You're
right.
QQQ is up almost 10%. Google's down on the year now here.
Yep.
I've never made a lot of money buying underperformers. And I know I talked about the China stocks, but, trying to play a little bit like it's been consolidating for a while. But, the opposite, like BABA, looks like the opposite. Looks like an inverted head and shoulders. Pattern traders here on PreMarket Prep here today. So I just think Google, I'm going to stay away from it for now.
Yeah, and you mentioned that increased competition from search coming from other AI plays like ChatGPT, but you also have, now kids, if someone's Googling new shoes and stuff, a lot of these people are searching for it on TikTok now and YouTube and other places. So there's competition coming from all angles on that search traffic for Google. If you look at some of the numbers of people that, people under 18 or younger people, a lot of people are basically using TikTok as their Google. So definitely some competition fears there. Last story of the day. You've got cryptos going to the moon. You've got some stocks going to the moon. You had one stock that really went to the moon last week, and now it's coming back down. Lunar, ticker LUNR, got crushed yesterday, down again this morning. On news again. I think that they're ending their mission early or something potentially, or
the thing tipped over. And
Dennis, you mentioned that tongue in cheek yesterday. I get tipped over. I'm like, oh,
and that's it. That's it. That's it. Once the thing tips over, the whole thing's done. They didn't have a plan for if the thing fell over.
I think this is just your classic though, and I'll make this point. We saw the big pop up, and this is like the space. This is like a lot of these story stocks here. They get really hot ahead of the event, and they almost seem like nothing is always, but they always seem like they cool off after the event. And we didn't find out that the stock had tipped over until like the Friday night. Well, Friday during the day, we were up at 14, and we closed that day. Or down at like $9. So no, sorry, is that right? The day before. I'm losing track of my days here. Yeah. So if we look, from the 23rd, so Friday night we closed at 9:34. So we were already off $5 from the highs. So we were already selling off on the news, and then we found out it tipped over, and then it really tanked. So I think what we just have to do is on these events, like the way I've always traded these things is owning them ahead of the event, into the event, the hype, but selling into that hype.
The news,
because these stories, typically the classic buy on rumor, sell on news, buy ahead of the event, sell on the event. That worked here again. So the stock was already going down before we even found out it tipped over. And then it tipped over, and then it's really getting hammered. So I don't know where it bounces. Maybe there's another story here. I'm glad they made it to the moon. I think it's impressive. Kramer said this too. I'm impressed. Like, they put something on the moon. That's pretty impressive in itself. So maybe there's going to be a story here again now, but this story has gone ice cold.
Yeah, I wonder where the stock would be trading at had it not tipped over, because I have a hunch that it really wouldn't be that much higher still, right? That,
no, that's what I'm arguing.
Right.
Is that I don't think it'd be down at 5. I think it'd be at 9. So
right.
I think the tip over actually happened on the gap down. But it was already starting to sell off. So again, if you're new to trading and you're seeing this story on CNBC that they just landed on the moon, I want to go buy that stock, you are probably buying it from somebody that's, like a professional that is probably already been in that trade ahead of the news, and now you're finally seeing the news. And typically when CNBC is reporting the news, the story is being close to over.
And being over, we are 7 minutes over here, so I'm going to wrap things up today. We're pre-market high 50.90. We need to get follow through that, get back into the 51 handle, 5100 handle. I look at unchanged. As the spoos came down to unchanged there on the dip, so keep an eye on unchanged if you bought the dip yesterday and you want to see continuation rally. Tomorrow, Ryan Dietrich joins us. Statman Do. We'll be on at 8:35. So, Aaron, great having you back. Glad you had a good vacay. And that's it for this Tuesday here on Pre-Market Prep.
Great to be back. Thank you, guys. Smash the like. We do have live trading starting right up, so make sure to stay tuned.
Ryan Faluna's hot. Watch that.
Yeah, watch Ryan Faluna. And we will redirect you right there. You do not need to go anywhere. See you guys tomorrow morning.